Hello everyone, welcome to my show. Welcome to a option trade ideas 101. So today we're gonna go and take a look on the results of CRM, which is Salesforce. As you can see right now, they're taking a bid at 17.39% to 24 at this moment. If you look at Fibonacci on the day chart, it looks like the 216.81 is the reverse for bearish situation. I think the bottom will be some around 194, 195, which is look like a little resistance. Support down here. And then would it be at 192. Let's see if you're gonna go all the way down there. But so right now, what we have, let's bring to you guys the list that I have for the possible place for the earnings week. So what I have was this. So Box and Kava was yesterday, and the play would it be Box, would it be this one? Okay, so I try to strangle in the same price range with this, was the $270. And the put side, that was the call. Sorry. And then the put side would be $90.25 put, which yesterday it was kind of like okay, but then today it flips. So this one is not supposed to be here, so that's erase this one. Actually, let's delete this trade because the play in Box would have been this one. So I'm still holding the Burlington, which is actually this the idea. I have the play on my own play, which is not here. So Kava, the original play would be this one, but I was kind of like, when I revisit, I saw that was from the 21st of June, so it's like a monthly. I don't know why I did that. Even so, today would be profit with $50 profit, but also not supposed to be this one, because for earnings it would be like for this week or next week, and the play would be that one on the top for this week. If it did the one on the bottom, that's okay. For this one, it would be the play, okay, for Kava. Moving forward, today we had two earnings that I was looking for a long time, and this one was Salesforce. That's what I'm talking about right now. And they had a bad results. So it says Salesforce share are trading lower after the company issue a weak guidance. I didn't put any notes in this one because I didn't write it down in there, but what I saw before this afternoon on a Webull, on a chart from Webull, was this pattern that they have over there. They have head and shoulder pattern. Let me zoom out and let's take all the indicators, make it easy for you guys. Take a Fibonacci out. So they have this write it down on Webull, and I notice, and I see also on the flow for, so on my notations over here, that's what I have. I have a PCI volume 0.94, which is for me is a bear, close to 1 for me is a bear. In one place, I think it was reboot was 0.94. The volume was 0.76, then I become neutral. The PCI open interest was 1.03 bear for me on a Weibo, and also the option chart was 1.05. The PCI on a weekly was bear of 0.098. The pulse was 2.12. On the option strat, it was big bear situation. It just became like a bullish because somebody posted for 2026 $4.6 million for 270 call. I don't know why. I don't know if they short at 270 call. It shows like bullish, but it seems that it could be like bearish situation. But this option strat sometimes it kind of confused. So on the trading view, the minimum would be 15% down, 231, and current was 272 when I took a note. Today was trading at 270. Average up would be 236. At the max 40% up, it would be 387. The technical was a sell, and the analysis was a buy. So I had like 5 minutes buy. 15 minutes before, when I took a look, when I did my annotations, my notes over here, my notations was neutral, then becoming to buy. 1 hour sell, 2 hour sell, a day sell. So I pick bear 270 put for 621 and 973. So in this case, I was right so far. I don't know, they have Autodesk. I don't know if they come up. The other one that I took a note and I put on over there was what's happening over here? It was OKTA. So I had the earnings today. So OKTA actually, it went from PCI volume from bearish to neutral. PCI open interest from neutral, stay like neutral to bullish. Pulse went up 0.364, would be 1.08 first. PCI on the weekly was bearish at 1.48, then went to 1.26. Option strat showing bearish, but then went up to bullish. The trading view was sell to buy, sell for technical, and buy to also a analysis. 5 minutes went to neutral to buy. 15 minutes went from actually stay sell, 1 hour sell, 2 hour sell. The day went from sell to neutral. So I picked in last time bullish, and I hit it. I did a one over here. I don't know why I'm not seeing that one, but actually I didn't take notes because I don't want to play that one, but looks like it would be a good play. So that's what we have here. Let's go back, and this one, all my indicators. So OKTA and Salesforce. Let's take a look at OKTA. How they doing it? Because I did a bullish for them. I didn't do much. Right now it's only one. It go from 1 to 2%. Actually, it was down like 4 or 5%, and then created like support, and now it's trading. You try to go down, but they have the support kind of holding the price up a little bit. So as you can see here, let's take a look. Stick everything over again. Come on, computer sometimes don't want to help me. I'll leave that one. Take this one off. Take the Fibonacci off. So kind of like this, went down to 86 and then went up to 101 and went back to 102, and then now they have the sell, but kind of gonna hold over here 96 maybe. See how much the pressure. Then UiPath is down 30%. That would be a good play. Let's see. But sometimes it's too much for keeping track of everything, or sometimes I don't like to do a how can I say, 2 digits, because it needs to drop that much. Need to drop like 30% or something for make it happen. Try to fix my phone. Somehow it's not working properly. So this play tomorrow looking tasty at $4,000 or more. Would that be nice? I don't know why. When I take a look, the 21st, it was trading I think $1,000, something like that. But anyway, I'm gonna take a look later. But as far as I'm concerned, let me see. 1 good, 2 good. This one's still to come. Burns is still to come. 3 good. Delta is still to come. But like I say, I was not at this point. I would have not hold this position with 145% profits. I would have closed this. I'm not gonna wait for the earnings tomorrow. I would have said thank you very much, appreciate it. $1,000 profit, $1,000 profit. Dollar General, I think it's tomorrow, but they have display. So far, it's not working. Okay, Dickens Sporting Goods. I did the Strata because I didn't know it kind of like showed me kind of like confused. So anyway, I think it would be like a good way to play Strata because I knew it is gonna hit big, and it actually did hit big. So right now, I would have closed today with 100% profit. With the $1,800. MongoDB, it's probably another one with this 30% profit. I would have closed this one. It's not making any sense to hold at this point. Marvell, either it's tomorrow, probably it's tomorrow. And well, so far it's not doing any good. None of those. Okay, OKTA has become bearish, so losing that position. So UTA is tomorrow, and I have this play over here. It seems to be a bullish situation. Let's see, Zscaler also I don't know. Have display an option strat at Strangle at 180, 190. So that could be it. The play I did a straddle. Both plays is making money, but I'm not sure how to go. So OKTA has some kind of situation because this company every time it's like in this price range. See, like if above $60, should have buy this one. So I don't know. So right now it's trading at 93.50, down to maybe down 3%. So that put me 57. So that's the loss, 50% loss. Yep, right here. Right here it's gonna be 50%. But this one on my other account, 226, 225. Well, 17%, 225. Right now it shows $150 to $77 contract value. That's what we have if it don't go down tomorrow, because if the market's pulling down, they're gonna go down. Okay, OKTA went to bearish, from bullish to bearish, gonna persist on a bearish situation. First of all, OKTA, I have a bear. I should have played bear, because everything, a trading view, the PCR weekly was bear, the PCR volume was bear. I don't know. Well, I don't see this coming back. Yeah, I don't see it. They're gonna push down, especially if this SPY is going down. Let's see here. Yep, 524. It's gonna go down. Salesforce is gonna go down. OKTA is gonna go down. Now it's down 10%. Everything went up. It's gonna hold. I don't think. Actually, today was kind of crazy that ANF went big. So I'm kind of like, I don't understand why, but it did. So, okay, so pretty much like I'm halfway on that situation, which is for my possible plays. I would say that, also let me show you this one about Kava. So this called long call condor. So this play so far, this is the second one. Actually right now dropping a little bit, but it was showing to me like 96% of chance of profit. Now it's kind of showing me 88%, but still, even so, I would have closed the day anyway with the $217, 98% profit. And this is the play, just like, I love it. It's the second time. It's a win-win situation. We're not gonna lose this play. It's not losing. It's 88%. It was 96. I don't know what happened, but still, the stock needs to move tomorrow like 7%. Now it's only if you go up, it's the way I'm losing. If I go down, it's still profitable. So, and if you don't move much, stay on the 4%, still like pretty good, So this is the play. The second time I did a play for a long call condor that works based on this website that sorry guys, now watching, may I have to pay attention. Okay, this is the one I was talking, long call condor. So I was playing with the numbers. So even if change 4%, I only go bad for me if you go change 7% on the upside, go like to 95, go crazy to 95, something like that. Then I start losing money, but all the way up to 91.50, 3.5%, 3.8%. Actually, $92, 4.3%. I'm good, you know. So this is good for me. Still 88%. And I take a look on this, and I take a look over here. And I took a look on, so you say bullish, neutral for Kava, and normally I go right here. I'm gonna go here and here. So it showed me the price that it would be. So if you take this out, so then I can see like where the price go above this one, and like if you go above this one, so then I take a chance to analyze these numbers and place these bets over here for the long call condor. Shows neutral here on option strat. Looks like trading on all-time high. New stock. Any bad results we push down. The downside is 36% back to 53. Continuation bull market persisted. This play should work for monthly play. So actually, you know, that's what I did for monthly play, but actually this would be like for the weekly and this perspective. So I just redid it. I place it, and today after the earnings, and today, you know, that works. I let it both open just in case, but the weekly would be nice too, much more profitable than a monthly. So no reason to call. Let's wait till Friday, but that should have closed this one today, you know, because you know it was profitable. You know, this one's profitable, and this one's going to be profitable. Dow closed today, not waiting for tomorrow. Dollar General, I had to wait because it was losing. Dickens Sporting Goods definitely closed. Strato, 99% a chance to profit, but 100% profit would be nice. So the bad was 1700, and now we are 35. So pretty good, this one. And let's see, Dow long call 65%. See, you're not gonna play with that. See, come on, I'm gonna close that one. So this week, so okay, let's do this. If you watch this video, you're gonna do it. They're gonna take the ones we have the earnings already. So we had the earnings for Box, close the trade. We have this one, Kava, close the trade. Okay, so we wait for this tomorrow to close tomorrow because it's okay. Dow with a close, not gonna wait. Even if you go to 190, it would be $3,000. But if it flips, you're gonna go bad. So 145%, it's pretty good. Close. Marvel, I think it's tomorrow. Zscaler, OKTA tomorrow. Marvel tomorrow. MDB tomorrow. Okay, Dickens Sporting Goods, beautiful, good strato, works fine, 100%. Close the trade. Thank you very much. And I already took the notes. All right, this is a wait for tomorrow to close a beautiful, probably $4,000. And Costco, I think Costco is not gonna move, but did the strato in this long. Let's see if this work because I think it will be inside this price range over here. Costco. If you do inside this price range, like we have down to 3%. If you go up 5%, we good. Cannot go down higher than 0. I mean, break even with 5% down. If we stay inside this range, I'm pretty much good. From all the way to close to 3% up to all the way down to 3% down. So it's like decent. That's Costco for tomorrow. I think it's tomorrow, probably. So Costco is a neutral going to maybe this going to be a good play. Bearish on the PCI open interest 1.13 weekly. So let's see. So you guys saw the ones I closed, the videos over there. You can take a look again. Please subscribe to the channel. Help with the big fellow here. SPY is going down, so I think it's about to the. Actually, let me take a look on Amazon. No, it's okay. Let's see. Yeah, right now they're showing tomorrow. I think. But they already showed tomorrow. Tomorrow we have Dow. Tomorrow we have Burlington, Costco, Dollar General in the morning, I think Dow in the morning, Marvel, OKTA in the afternoon, Zscaler in the afternoon, OKTA Zscaler in the afternoon, Costco, Burlington in the afternoon, Dollar General in the morning, probably Dow in the morning. That's what we have tomorrow. So pretty much it, guys. We are pretty much good for today. Results was like I'm doing like wonderful analysis so far. Hopefully Burlington follow up with the Ross, and which is Rosti, ROST. And then post like a big bit top and bottom. Forecast good. They open stores like left and right, and people don't realize about this open border with immigration. People needs to buy clothing, and I mean some of the guys buying like on those Goodwill, but the two other store for immigrants is Ross and Burlington. So that's another thing. And also because they sell cheap clothing with people that are not making great right now economically, so they probably go in Burlington. They went up 7% last Friday. Look like they pre-post something saying that's supposed to be a good buy. So they have a half short position on a 230. So let's see if today, the last 2 days trading inside the 200. So let's see if it's tomorrow after the earnings. It might go to 230. Who knows? That's 15%. I think Ross did it today. Umber Crawford did it. Up 20%. Okay, let's see. Yeah.
Signs of slowing down tomorrow. We got Dell, NetApp, Marvell Technology, MongoDB, Costco, Gap, Nordstrom, and Ulta Beauty all reporting. And it's a lot.
It is a lot. Tomorrow's economic calendar also busy. Investors are going to digest the latest reading on first quarter GDP. That's expected to be the same as the last reading. Weekly jobless claims report, which we know have stayed pretty tight, and pending home sales data. John, I'm also watching the 2-year Treasury yields. We know we're just below that 5% level, that sort of key technical juncture that if we were to pierce above it, I think a number of strategists believe you could see further headwinds for the S&P.
MongoDB results, I think, are going to be particularly important in their guidance in light of what we just saw with Salesforce down so heavy and over time. I mean, they're trading at the low end of the range for the year, back around late 2020 levels.
Dell, too, especially after HP's comments on AI PCs. So much. That's going to do it for us here at Overtime.
Fast Money starts now.
Live from the NASDAQ market site in the heart of New York City's Times Square, this is Fast Money. Here's what's on tap tonight. Hiding in plain sight while
favorite show, Fast Money.
Toasting the Nvidia surge, rates have started climbing again, denting returns for a host of
yeah, they talk about MongoDB being probably like another position that might be at the short side. I don't think this. Netflix receive a buy, kind of crazy. The U.S. Treasury, they're talking, Spotlight. So tomorrow I got a day off, but I hope, on Friday, I don't know if it's going to be. Here you go to have
drop after hours in shares of Salesforce, the software giant plunging on a revenue miss and weak guidance. The earnings call just getting underway. Steve Kovac is here to take us inside those numbers. Steve.
Yeah, Mel, and it's just this ugly move here, and it's largely due to that whiff on the second quarter guidance. So let me give you those numbers. They're expecting $9.2 billion to $9.5 billion in revenue for this quarter. Street was looking for $9.37 billion. And on the EPS front, $2.34 to $2.36. Street was looking for $2.40. Overall, mixed results, though, missed expectations on revenue, but a healthy beat on earnings per share. So what's going on here? Well, CEO Mark Benioff has been talking a lot about AI, but not showing any direct sales there. He said in this earnings release, quote, as the world's #1 AI CRM, we're incredibly well positioned to help companies realize the promise of AI over the next decade, end quote. But clearly investors were hoping for more detail than that. As he said, the call's just kicking off now, and we'll be listening if Benioff gives some more concrete detail on how they will generate sales from AI. I'll be back here with more as we get it. And you can catch Benioff speaking with their own Jim Cramer on Mad Money at 6 p.m. Eastern, Mel.
All right, Steve, keep us posted. Thank you, Steve Kovac. So what's going on here? It looked like the guide lower wasn't a huge guide lower for a stock that hasn't done that well over the past 3 months. So what's the story here, guys?
I'm not sure because, again, we play the game. If you had told me what the quarter would be, what's the market reaction, I would say muted at best, not down. What are we down? 18%?
Yep.
I mean, that's pretty dramatic on top of the sell-off we've seen since March. Technically, and I remember talking about this in March and April of this year, you have these little double tops from November of 2021. I think that scared some people. Obviously, Karen said it, maybe they're looking for a little bit more on the guide, clearly. But, I mean, the guide wasn't disastrous. I actually think you're trying to figure out where you buy the stock. And quite frankly, this 220 level-ish is a 50% retracement of the low we saw. I think it was $100 and something in late 2022 in that recent high. So you're going to get a big volume day tomorrow. 220 should be huge support, in my opinion.
But in an AI-fueled market, do you want to be in a SaaS company that sells on a subscription basis, who says that AI will, the value will be delivered over the next decade, not in the next 10 months? In the next decade, 10 years.
Yeah, and we've been talking about enterprise software and some of these SaaS names for a while now. The underperformance has been very notable. Some very expensive names trading down 20% plus on the year. And, again, we've been using this term kind of AI adjacent. There's lots of ways that generative AI is going to help their business models, make them more productive, make them better or more streamlined for their customers, but not right now. We're not even hearing about a big spend by a lot of these companies either. And so to me, I just find it.
Do you guys notice this? At this time, 5 o'clock sharp, the stock hit like 270 and then just went down big time. And we have, let me bring to you guys. Like I said, I think I saw I was CMO. Yeah, $5 million. 297. Okay, let me bring to you guys. I don't know if you can see it down here on the bottom. 270 call to open June 18, 2026. $4.969 million block. You thinking maybe that was this candle over here? That candle is just like weirdo. 271, 225 open, 271 high, 225 close, 226, actually 225.39 close, 226, 225.39 low, 226 close. So maybe this over here hit it. It was 755 contracts by 270 call, high unusual, $4.69 million. But for 2026, and the stock trading right now to 26, and didn't create any block.
The client spend on cloud in some of the partner surveys, and if you go through broker research, you can kind of see they've been trying to gauge this going into the numbers. I don't think anybody had this kind of weakness out there. But again, it does tell you that the marginal dollar is being allocated elsewhere. And we've heard how much is being allocated to AI, so it's not a huge surprise.
All right, CRM shares down 16.5% in the after-hours conference call underway right now. We'll keep you posted on any developments. Now let's get to that surge in rates that we've been seeing over the last 7 days and the blinding effect that NVIDIA has had over most investors. While the tech giant has surged nearly 25% over that same period, yields have quietly moved higher, too. The 2-year is now just a couple of basis points from 5%. The 10-year is now back above 4.6. These moves putting a hurt on a number of sectors outside of technology. Utilities dropping over 4%, transports down close to 5%, the KBE, the big bank ETF, falling over 6%. Tim, this is something that you flagged and you're concerned about.
Well, to the extent that semis have led, and that's been enough of a path to follow to take the broader market higher, 3 or 4 days, or 6 or 7 or 8 or 9 days, which is depending on which subsector you're looking at. Again, transport's down 7% in 8 sessions, industrials down 3.5 in 4 sessions, energy down 5 in 5 sessions. I mean, there's different places you can look at it. But as said, the bright light from NVIDIA and semiconductors has masked what has been weakness in the broader market. And the broader market weakness began when you started to see, again, that uptick in rates from 430, 431-ish on the 10-year, now up to 460. Notable that the move in Japan, I know people don't follow JGB yields, but I think you should, because the higher move in the 10-year in Japan is something that I think has pressure upward on U.S. rates. I would also just say that uptrend in the long end is something that's well established, and it's certainly established year to date. So there's been a couple tests of it coming back in, but right now we're in an uptrend, and even though there's volatility within that trend, Guy talks about it, Dan talks about the treasury markets that are more volatile than they should be, but the trend is higher.
Mm-hmm.
Yeah. Oh, I thought you were going to.
She was looking right at you.
I thought that you had nodded, indicating that you wanted to.
Yeah, it's interesting. I mean, like, you guys keep kind of coming back to Japan and what's going on there, and sooner or later there might be a knock-on effect as it relates to rates. Do they start selling, U.S. Treasuries and the like? I mean, just from a technical standpoint, I think if you look at that uptrend that's been in place from that 4.25 level or something like that, it looks like it could get up to 5%. I just go back to, if we get to 5%, the last time we were at 5%, the S&P was at 4,200. And I think it's a very different place if we get there in the next couple of months than if when we were back in September. And
So,
I think some of the reasons why.
sorry, guys, but I have to bring this to you guys. It's OKTA. You know, I for a moment, I thought it is not going to go, you know, it's just like crazy, you know. It's trading right now, 3 minutes, big bull, buy. And it's just like all over the place. Building like a resistance, $100 on a 4%. And it's just like, I don't understand what's going on over here. I thought I was like losing money, but it looks like right now pretty much like making money at the point. It's let's try to see it on my saved trades. OKTA. It's making like $100 because this plays for $100 profit, and if you go up again and you hold it like that, I think it's too high. And if you stay that high, a 102, 101, all the way up to the 31st is $200, 100%. Right now, I only have 40% chance to be profitable. Max profit, it's 118. The play was 82. So we'd see. It's moving higher right now, as you guys can see it. It's kind of crazy. This stock is just like all over the place. It was higher and low. It hit low twice. Build a support 93. Now it's building resistance 100. I don't know where this goes. I have to wait for tomorrow because this is gonna be crazy. You know. For sure, the money is like moving from one place to another. So let's take a look here. SPY. So I open a short position all the way up here because, you know, I think it was overdue for a correction. And right now it's trading at 524. So I passed the two points that I have over here, the two alarms that I have. I have the 523 and 521. Actually didn't pass through. So it's still like a little up. 524 right now. So let's see. Talk about higher heights.
I mean, I think about it, all right, what's the effect on banks? And different banks, obviously, different effects. I think for JP Morgan, to the extent their book is really short duration, which it is, good for them. But to the extent that deposits look for higher, higher places to go, that's not so great for net interest margin. But where it really does start to hurt is refinancing. And, we talked a lot about commercial real estate in the last few weeks. I don't think of these money center banks as having huge commercial real estate, but that is why the regional banks aren't doing as well.
Yeah, I'll just say this about like NVIDIA, for instance. So you're talking about picks and shovels. I mean, the out year, next year, fiscal 2026, did not go up that much. We're seeing consensus at 30% EPS growth, 31% sales growth. And you think about where the margin gain has been this year. This is where they have the sort of pricing power. And I think I extrapolated out a little bit. We've talked about this a lot. When you think about Microsoft, you think about Google, and you think about Amazon, I mean, there's massive customer concentration right now, and they are competing with each other for all intents and purposes. This means like with NVIDIA, they're trying to build their own high-end GPUs. So at some point, the rubber's going to hit the road a little bit, and you're going to see a decel. And then the other thing is, think back to late 2021, okay, when some of our most favorite stocks were on the precipice of selling off 75%. NVIDIA, Tesla, Netflix, Meta, all down 75% from their highs in 21 to their lows in 22. Stocks like Salesforce got cut in half. I mean, I could go on and on. Amazon got cut in half. So the idea that it's just so concentrated right now and it couldn't happen again seems silly, because what are we just talking about? We're talking about rates. Jamie Dimon just said, what do you think it's going to be like if we have 5 or 6% rates? Well, I remember the last time that the Fed signaled that they were going to raise rates, and they weren't even signaling that they were going to get to 5%. How many hikes were they talking talking about? We were thinking 3% or something like that. That's what Fed funds. So to me, I just think we have reached a really silly place here as far as, just enthusiasm about what is obviously a huge, huge secular shift. But Guy has mentioned this. There's cyclicality that will come into play here. And when things start to go lower, there is no price that makes it look like a great level to buy, not on valuation or anything like that. So that's my little warning, but, whatever.
So if you put the pieces together, if we put the pieces together, and you can pick any pieces you want to make any story you want, but let's put the pieces here that we're sort of laying out here on the desk, at least tonight. And that is a potential slowdown in the AI spend in the out years. And then you couple that with where rates are now. And if they are here or higher, that really puts a dent into the companies and sectors that need to refinance, whether it be commercial real estate or even corporate debt holders. You were just talking about Walgreens today. And how they are leveraged up the wazoo. And it's really an issue for them right now, as we can see in the stock.
Yeah, net leverage of I think 3.9 times, although Karen was saying she thinks it's higher. And it's a company that, if anything, the talk is that they're thinking about selling off Boots. That's not necessarily out there. It's just what the analyst community is talking about and what they could do. But higher for longer, for sure. And at some point, this does create problems for companies that have debt burdens. And I just drop it back into the snapshot of the market. This is also a market that 8 days ago was at all-time highs. And so we have to think about this, and this is what we do on the show. We talk about the day's action, but we try to drop it into the perspective of short, medium, and long term. I think the long term probably nothing I'm terribly worried about in terms of doom and gloom. I do think you have a dynamic here where higher rates still haven't exerted their toll. They haven't exerted their toll. We know that there's been a sequencing for the economy based upon a post-COVID environment and a post-Fed hike environment that's just moved slower. We got a big payroll number next Friday. Boy, that might, imagine that could be bad news being bad news. And if you started to see jobs really fall out, it might be the first blush for the market to get excited that rates come down temporarily. But, a lot of people feel overstaying the welcome by the Fed means actually economic pain.
I want to push back on Dan, if for no other reason than just to push back on Dan. But
split them up.
Can we split them up?
Okay, in the 2022 time frame, we had still, rates were zero, right? That's a very different place from where we are now, where rates have either plateaued. Maybe they move up a little bit higher. Maybe they move down.
Yeah, but I'm sorry to interrupt. Isn't it the expectation where rates are going to go, not exactly where they are right now? Tim just mentioned the long and variable lags once you get to that level. And again, do you understand what I mean? Is like we didn't know how high they were going to go. Right now, we're in the same place, but we haven't really felt the negative effects of high rates over the last year and a half or so.
I don't think that's true, actually.
Really? We haven't seen a slow...
The real estate market, of course, they've felt. Right? We're
Understood.
in this housing situation.
It does seem pretty contained, doesn't it? I mean, we had a tiny little regional banking crisis, and we just moved on. And it made all of the majors that much stronger. You know what I mean? So I don't know. I mean, I don't listen. I'm not calling for a doom and gloom or anything like that. I'm just saying, think back to late 2021 and think back to a very orderly sell-off in the stock market in 2022 that saw some of the most loved names lose 0.75% of their value. Okay,
yes. Okay. They were. I mean, some of those.
That's doom and gloom, by the way.
They were in stratosphere. I understand.
But the stock market didn't even crash, is what I'm saying. And we've lived through crashes where we've seen the stock market get cut in half, and then we've seen our most loved names lose 75%. Okay, so what I'm saying is the next time around, if there's a reason for it. There will be a next time,
right. Yeah, but I'm saying, the economy's still in decent shape right now. People are still employed.
Right. But no, I'm just going to say, we don't necessarily need to call for a 70% decline from close to record highs at this point. I mean, people out there do not want to see a 10% decline or a 15% decline.
I know people are buying NVIDIA right here.
Right.
Okay, so my question to this desk is, do you think NVIDIA is going to be a $4 trillion market cap before it's a $2 trillion market cap? If you think it's going to be a $4 trillion...
before 2.
I'll take that bet right now.
Does it? So much closer.
At 3? No, it's at 3 right now.
So at 5:18 p.m.
It's about to overtake Apple in market cap.
Put that one in the books.
So do you understand what I'm saying?
4 trillion, 2 trillion.
And let me tell you something. A lot of our viewers, and I know this because we talk to retail investors, they never sell. They never sell.
But that's a support for, first of all, a 10% move in the market is not going to have retail selling. And we've seen that. That's a correction that passive investing and also ultimately, and I think you'd be dumb on some level to be trading in and out of the market. They will acknowledge, most people will acknowledge, their advisors will acknowledge, we're not smart enough to time the in and the out. And if we believe in the long-term story, we're going to continue to stay in this market. What we all will acknowledge, and I'll speak to your point, though, Dan, is even in 22, when some of these stocks, not all of them, you're right, though, the names you mentioned, dead on, there's no question that the market levels weren't that bad, but there was destruction. I mean, think about airlines, think about banks, there were so many other parts of the economy. So when GM goes up 75% from October of 22 to where it's been just a week ago, as someone that's held it, I'm not doing cartwheels because, in fact, the stock's largely done nothing now. It's just gotten back to a level that it needed to go. And I think that's probably where you could make an argument for a lot of the market. Outside of the sanctity of the M7, at times, this Fed crisis has been something people have moved on.
Quickly, understanding that the economy is much different, but the transports did not verify any of the move in the S&P without question. Those rolling over. And the Russell still, through the lens of the IWM, has not been able to get through that 208 level.
All right. Coming up, investors binging on Netflix, shares continuing to climb this month. So what is behind the surge? We'll discuss that next. Plus, UNH dragging on the Dow as the insurance company weighs in on its Medicaid business. Why that trade could be a liability when Fast Money returns.
Okay, guys, like they say, the transport, let me bring to you guys what they talking about. It's this one, I like this website. So this was today. So Tillits was 100% sell, communication service, this because Netflix, 68%, real estate 87, materials 96, information technology 89, industrials 98, healthcare 83, financials 92, energy 92, and consumer staple 90, consumer direction 73. So actually this moved the S&P close to 1% down, especially in utilities. And also, if I'm not mistaken, I can okay, not here, but it have like go like more. Well, no, found it. I do login. Do I have password for this? Oh my god. Anyway, so I believe you can find. Let's take a look at futures. So futures already down 600 points. 523. I don't know. Is this stop or this continues? I don't know. You talk about Japan 10 years. Japan 10 years. 143. Down 0.35. I don't know. 497 in 2 years. 462. Actually, the 30 and the 10 years went up big time. Just one, 10 years. 106. Was down 167. All right. Okay guys, thanks for watching. See you next time.